Well, hello everybody, and welcome to the Hickory Home and Garden Show. Today, I'm Kate Dillon. I'm one of the organizers here at the Hickory Home and Garden Show. And up on stage, we have Ruth Schrader from Atlantic Bay Mortgage, and we have Kelly Burris, Realty Executive. So next to me, I'm a show organizer, but Ruth is a lender and Kelly is a realtor. So we thought it was really valuable today to bring together these folks because both of you are instrumental when anyone wants to purchase a home. Both of you, we need both of you in this process, but it is quite a process. And so if you're new to buying a home, then this is, I hope you'll find some great value. We've got some great talking points here to talk about. And so actually let me just say each of you, give us a little breakdown, a little backstory about, who you are, and that'd be great.
Yeah, so I'm Ruth Schrader. I'm with Atlantic Bay Mortgage. I have been in the business for a long time in some capacity, but doing purchases since 2011. Personally, I have 3 children, and I've been in the area my whole life. So locally, I think that's helpful, to know the local market. So,
I'm Kelly Burris. Is this on? Hello. I'm Kelly Burris. I have lived here, my entire life. I have worked for the same company, Realty Executives, for the entire 22 years that I have been a real estate broker. Very happy, with the company that I'm with. I have 3 children, 1 grandchild. So we're
plugging along.
Yeah. Great. Let me trade your microphones. Is that? I'm not sure. Juliet, you got me.
It felt like it was distracting.
Yeah. All right. Let's see. All right. Yeah. Nope. I got it. All right. So let's see. I'm going to kick off. I've got some questions here for you guys, and I'm going to be a buyer for a few minutes here.
Perfect.
So if I'm interested in starting the process to buy a home, really, what's my first step? Like, who do I call first?
I think that would be me.
Okay.
I think it's kind of flip-flopped, honestly, over the last few years because now, you can't make an offer without a pre-approval letter. So that's where I come in. So you want to talk to a lender first, so that you can get your budget, get your pre-approval, really know what you're looking at as far as payments and everything before you get your heart set on something, so I think that would be me first, lender, and then I'm going to hand you over to Kelly, and then Kelly is going to talk to you about what you want in a home, so she can find you the home that you want within your budget.
Great. Now, you mentioned pre-approval, and I also hear it floated around pre-qualification. So what's kind of the difference between those two?
So a pre-qualification is really just the bare minimum, that you can get away with doing in order to make an offer. You can certainly make an offer with a pre-qualification, but what that consists of is you filling out an application with a lender, and really not even submitting any documentation. So it's a letter that I can issue where I look at what you've stated on your application. I don't have to send it to an underwriter, and then I can send a letter saying you're pre-qualified. A pre-approval, in my opinion, is a lot more valuable. So I like to reserve a pre-qualification for like an emergency situation. So let's say it's the weekend, underwriting's not working. You have found a house that you have your heart set on and you need a letter to make an offer. That's when I would do that. But a pre-approval, if we have a little bit more time, is where I still do an application, but I collect all your documentation verifying the information you've put on your application. I send it to my underwriter. They usually send it back in about a day or 2. And so it takes all of the back work done. We do it up front. So it's a clean, it's already been done. It also cuts back on turn time when you go under contract, so we can turn it around a lot quicker. And it's just a more stable letter.
Gotcha. Now with that pre-qualification, are you pulling credit for the?
Yes.
For both of these you are?
Yes.
Okay, because it's one of those things like, I don't know about anybody else out there, but I get real sensitive about anybody pulling my credit,
Yeah.
So I want to make sure that I'm really serious and this is a road that I'm going down.
Yeah. Well, and one good thing about my company is we can do a soft pull first. So I always do a soft pull on credit, which doesn't hit your credit at all. So like if you pulled somebody's credit after me, you wouldn't even see it as a credit pull. That way I can get 2 credit scores, and I can tell by having that, if it's going to be doable or not. So if it's not a doable loan, I'm not going to hard pull somebody's credit to lower their credit score even more.
Yeah, and like a soft pull is like when my existing credit card companies will just like, hey, does she still have good credit? Like, or maybe we can like up her credit, like give her a little bit more spending or
Exactly.
something. That'd be like existing. So that's a
Yes.
soft pull, correct?
Yep.
Okay, we might as well learn about credit scores while we're here too. So, now I know that several years ago there were so many different exotic loan types. I think a lot of that got knocked out, and so of course we hear about like the 30-year fixed rate mortgage, but I think there still are some other options out there, and tell us a little bit about those.
So there's still, the conventional loan, which is a minimum of 5% down if you're not a first-time home buyer, 3% if you are. That one, there's that, and then there's VA loans that are reserved for veterans. There's USDA, which is rural development. Those are 100% financing. Those are really good loans for especially first-time home buyers. There's FHA, which is usually catered more towards, like, I would say, lower credit scores with less down. That's 3.5% down. And then of course there's a lot of other programs that we partner with the loan types, for interest rates and down payment assistance and things.
You mentioned down payment assistance. So what kind of programs are out there for that?
So there's a lot of different programs for
Really?
that. There's local things, and then there's also like federal and state programs. I work with all the different ones that are available. Sometimes we can layer them, depending on qualifications, but some are repayable grants, some are just, free grant money, just kind of depending on the program.
Okay. Now, what about some folks that maybe their credit isn't so great? Are there some options for them, or has that kind of gone by the wayside?
Yeah, so we of course have minimum credit score requirements, but when we do the soft pull, if I can tell that there's not going to be any options right away, we have a program called a quick rescore where I go in and I can simulate based on the information that I have what they need to do and how long it'll take to get there. So I don't really ever just say flat out no. I say, I give them a plan. I give them a game plan. So it's definitely always worth at least looking into if you're in the market or think you're going to be in the market, to have somebody give you a plan so you're not just guessing on what to do.
Now, with that, if someone if they think they might be ready to buy a house, they might be ready, maybe they're saving up a little bit. What kind of a timeline are we, should people kind of think or be prepared for? Just in general, like, hey, wow, I've been working hard, been saving my money, trying to pay down my credit cards, and, is that home in my future, is that 2 weeks away, or is that 6 months away? Like, I know it depends on a lot of factors, but what would be some thoughts that you both have on that?
So as far as the pre-approval goes, those are good for 120 days. And then after that, we just do a soft pull to keep it going. But as far as like what they're looking for in a home, I don't know. I mean, that just depends, I guess, on how long it takes them to find what they're looking for, right? What's the average time frame usually?
Oh gosh, there's no real answer for that.
Closer.
Sorry. There's no real answer for that.
I don't think it's on.
I didn't turn it on. Sorry.
Push on the.
Okay. Okay.
Cool. Good. All right.
There's no real accurate answer for that, but because some people, will look at one or two houses and that's the one, and then some people, it may take them 10 or 15 houses to look at. So once we find the house, it generally takes anywhere from 30 to 45 days, depending on loan type.
For closing.
Okay.
Yeah.
I mean, I think that gives a rough estimate. Was it 2 weeks or is it 6 months? So we're at that. Once you find it, which you never know how long that's going to take. That's a process, but to that in just a couple of months, though, you can be planned for that. And then once someone is pre-qualified, where do they need to go to search? How can you start searching for a home?
We're always, happy to, show you anything that you would find on the internet and send to us. However, we're going to give you the most accurate and up-to-date availability that there is out there. There's websites that you can go on that are very, very popular that give very, very bad information. I wasn't going to say it.
I'm not a realtor, so it's totally fine. I can say what I want.
Yeah, I wasn't going to go there, but yeah, there's, a lot of houses that, show in foreclosure, and it might just be because they've missed a few payments and they can easily, catch that back up. So like the information is just really not very helpful on that.
Yeah. Now, what about something like MLS? Now, that's like, or is there, or should they just go to the realtor? And what kind of questions are you going to ask when you start this process?
Okay. Well, the general public doesn't have access to the actual MLS. That is something that the realtor is the one that accesses. We, ask you, where you want to be and like what, beds and baths and, some of those types of questions. So that way we can search in the MLS and send you a list. And, once we send you that initial list, then we can, set you up on an automatic email that will, send you anything the minute it comes on the market. So that way we don't miss out on anything.
Actually, I've had that experience, and I thought it was really cool. It was great. You get to say, like I'm looking for this, and I don't want that, and it's kind of neat to be able to just like kind of look, before you look in person and drive around town in traffic and all of that stuff, because it feels weird.
The only thing that's, like difficult for us to search is just something that we just can't do is, if you tell us, okay, set me up for updated bathrooms or updated kitchens or open floor plan. That's not a criteria that we can search for because that is opinion based.
Yeah, and it's not the same as, it's just not one of the questions that they even ask. Like because you also list homes too, and when you list it, it's like how many bedrooms, how many bathrooms, where's it located, what's the square footage, does it have a garage, does it have a pool? Like there's certain things that it asks you, but open floor plan is not one of those criteria.
Yeah.
And be very flexible.
Yeah. No, it's being hateful.
Be very flexible, with what your criteria is. Give consideration to what are the must-haves and what are the wants.
Now, once you're in that process, it gets pretty exciting. So what if your buyer finds a house over the weekend? What, will they be able to get in touch with you? Or do you work on weekends?
Absolutely.
Yeah, I'm going to trade you again.
I'm not even moving. I'm trying to hold still.
Okay. All right, we're good. Okay, and then we talked about how long it would take there. Now let's talk about inspections for a minute. There's a lot of parts that just are not as fun with the home buying process. Now, what inspections are required and
Who's requiring them? It wasn't your fault. It wasn't your batteries, but.
And we'll answer the question. So on my side for the lender, we require an appraisal, which we go through, the company to order. And then as far as any other inspections, Kelly?
I always tell my clients, get as many inspections as you can afford to have. You need to know what you're buying at the end of the day. Of course, it's your expense. So I can't make people, have inspections, but I always strongly recommend, home inspection first, termite. If you want a survey, those take a little bit longer to have done, and sometimes that can be difficult to achieve before closing. There's, radon, water test, septic test, so it's really going to depend on where you're buying the house. If you're in the city limits, you don't need a septic inspection.
Yeah, I know in my personal experience, I was buying something that was older. I just bought, last year, and I was buying something that was older, so there's a few questions I personally had. I wanted to make sure there wasn't any water damage anywhere, which a home inspection will do.
Yep.
Also, I wanted to know how old is the water heater and how old is the HVAC system, because those HVAC systems can be real expensive. And I wanted to know. Now, I bought a condo, so I didn't have to worry about a roof inspection. Otherwise, that would have been something, I was just looking at those really big ticket items. And a water heater may not be that expensive, but damage from a broken water heater can be very expensive. So I want to know how old that water heater was, and I know some of that was just included, obviously, in a home inspection, and I don't think it was even required. Obviously, in an appraisal, and I think it's something, I learned this during the process, and I have a friend who's an appraiser. One of those things that's changed over the years is that it used to be, I don't know exactly how it worked before, but I think there was a lot of connection between, let's say, everybody knew, like you could pick your own appraiser to go, like, hey, Bill the appraiser, will you go and appraise this home? Because, we're a lender, or I don't know who hired the appraiser. Now it doesn't work that way. You guys, you order an appraisal, and I don't even know what entity you're asking, but it sends it to somebody random. You guys, that way there's this complete separation, and there can be no funny business that goes on with appraisals. And so I think that's good for the consumer, that we can feel a little more confident that when an appraisal comes through, that it's really that we can feel confident that the house we're buying would be appraised for that,
Right.
that we're not it's not fake.
Yeah, because I, the lender, I'm not calling Bill the appraiser and saying, "Hey, Bill, I need you to appraise the house for this much."
Right.
Yes.
Exactly. Yeah.
Exactly.
And I don't know what shady stuff, kind of went on with there, but obviously I'm pre-2008, so but obviously this is not you guys'
Some of
first
the
date either.
regulations that went into effect are definitely to protect the consumer.
Yeah. Well, and I think it protects the market too, because things were just getting really, really crazy.
Well, and we really want to instill confidence, in our industries. We want our client to trust us.
Yes. Yeah. And we want to be able to trust the whole process too, for sure. Now, when you're going to showings, can you bring like your friends or your parents, or can you bring whoever you want to bring along when you're going to house showings?
Typically, you can bring whoever you would like to bring. I will say that normally it just doesn't make sense to do that. A lot of the times people will, maybe want to show off the house that they put under contract to, a friend or family, after they've put it under contract. But I really recommend that it just be the people that are writing the check every month, because too often I see, and parents, they definitely mean well. They want to protect their kids, and I totally get that. But they'll come in, to this house, but not this house, and this house, and not this house, and they aren't seeing the whole market. So they don't know necessarily when we have found an actual good one. So they will talk their kids out of, a really, really good option, because they've not seen what's out there.
Yeah. Well, in line with all of that, can you even have, like, sometimes maybe an inspector's kid wants to, buy a house. Can they do any of the inspections?
We always recommend a licensed inspector to do it. Yes, your brother can do it, or whoever that has had some experience in the construction field. I totally get people wanting to save money. However, if they do find things, let's say they do find things, I have no report to send to the other side to prove that there are things. The seller wants to see in writing from a professional what is actually wrong. They get to see pictures proving that it's actually wrong. So it's very, very difficult for me to negotiate any repairs based on Daddy's list.
Yeah. Well, when Uncle Billy comes out. Yeah.
Well, and honestly, if I can piggyback off that just a little bit, I would say the same advice too goes for like advice from people for the lending side too. Like, it's great to ask advice from your family, from people who've been through the process and whatever, but and asking, Google, like, do your own research, but you definitely want to talk to the professionals that are in current market with the current programs, because if your parents haven't bought a house in 10 years, it's not the same as it was 10 years ago. And I get so many people, especially first time home buyers, that'll come to me and say, I know I have to have 20% down because my dad said da da da, and I'm like, that used to be the case, but it's not anymore. So you definitely want to talk to the professionals.
Yeah, and getting 20% down is a whole different ball of wax. When you look at multiplications of incomes versus home prices today are not the same as they were for grandparents in the 50s.
Buying houses at $60,000. Yeah.
Yeah, it's crazy. And now, what about if the house looks really well taken care of and perfect? And what would you still say if somebody's like, well, I don't know, do we even need an inspection then?
Absolutely. Even brand new construction homes, I strongly recommend that my clients get a home inspection, because there's humans involved. Mistakes can be made, stuff can be missed, and and it happens. So we need to know, so that way we can ask before we have written the final check, and it's of less interest to the other party to come and fix something.
I think it's really important. I mean, and sometimes, I've never built a new home, but I know my brother's built a couple of them, and there's all these like punch list items. Punch list would be things that you find that weren't done or weren't done correctly or need to be fixed. And so just because it's new doesn't mean that you can 100% trust that it's perfect.
Not all builders are created equal.
Correct, yes. Yes. Now back over here to lending. Now we were talking about putting 20% down. Mm-hmm. So what happens? What's the deal with the 20%? Actually, I do know the answer to this question, but I'm just going to lead up into it. What's the difference if a person has 20% down versus if they don't?
So there's this fun thing called PMI, a private mortgage insurance. So a veteran and a VA loan, it does not apply to. That's the only loan that, that's the benefit of being a veteran, is you don't have to put 20% down and you do not have to pay private mortgage insurance. But with anybody else, if you don't put 20% down, you pay private mortgage insurance, which is basically an insurance premium that protects, the title of the loan, for the lender and for the buyer in case anything's missed, errors, whatever, there's no issues there, because we're taking a risk, obviously, with financing a higher loan to value. So there's a premium that you pay for that.
Yes, and then how long do you have to pay this extra money?
So it's basically until you get to 80% on your loan versus your value. Yeah.
And but not necessarily automatically. So it could be. So it's when you reach that 20% down,
right?
Potentially,
yes.
Unless you get your house like reappraised at some point, yes. And then you actually have to request that the PMI be removed. Now, is there a percentage? I can't remember with the PMI. Mm-hmm. Is there like a certain percentage? Is this like a 0.5% or like what? It
depends on the loan program and the credit score. Yeah, so certain programs, some of the government programs like FHA, USDA, they're set amounts. But then on like a conventional loan, it's going to be based on the loan to value and the client's credit score. But to your point too with the PMI, if there's a market increase, like during COVID, the market just hiked. So a lot of people could request their private mortgage insurance to be removed way before, it would have just automatically dropped. But you do have to go through the avenue, of getting with your mortgage lender. Sometimes we could do it without an appraisal, if we have enough data that shows that it's, worth more, and then sometimes you have to get another appraisal.
And this is really a post the crash of 2008.
Yes.
This is a post 2008 situation. And to my understanding, I believe, since it's private mortgage insurance, it's really insurance that protects the lender. So if the person who owns the home, if they default, that you as the lender, mm-hmm. you're made whole from the insurance company that's covering this mortgage, correct?
There is a lender policy and a buyer policy.
Oh, okay. Yeah. Okay.
Yeah.
Great. So that's the difference in with the PMI. And let's talk about the other things that are involved when we're making a house payment. So interest is obviously a crazy one, mm-hmm. but we also have escrow. So tell me a little bit about escrow.
So the things that make up a mortgage payment, obviously, is principal, interest, taxes, insurance, and then PMI if it applies. So escrow is when you take your homeowner's insurance and your property taxes and you include them as part of your mortgage payment. When you pay your payment, obviously it's a separate bucket. You didn't used to be, it used to all go into one bucket, but then you were paying interest on your escrow account. So they separated that several years ago to where now, that you're not paying interest on your escrow account anymore.
Good.
Yeah. So that was a good change. So now, it goes over here and then it's pulled out when it comes due, because, taxes come due once a year in this area in North Carolina. And then homeowners insurance comes due once a year. So you're paying into it monthly just really to help budget. And then we pay it when it's due once a year. You can avoid that if you don't choose to do escrow. You can avoid that by putting 20% down if you don't want to do it.
Gotcha. Yeah, well, and it's kind of nice. It's just something you don't have to worry about. It's just because it's a little bit more difficult to remember, when's my insurance due? And then you have to cover the whole thing all at once. And same with property taxes and all of that. Now, I don't know if this is on here, but let's talk about interest rates for a second too. Because interest, that one thing that's so interesting is what we have, how these are worked. These loans there's different kinds of loans out there. And what I mean by that is when you buy a car, for instance, you kind of get hit it's going to be this much interest, and whether you pay it off tomorrow or you just let your payments go, you're going to pay the same exact amount. We're going to borrow $10,000, and you're going to pay 7% on it, so you're going to have $700. $10,700 is going to be the total. That's not how a home loan works, because it's an amortized loan. So do you want to talk a little bit about amortization?
Yeah, well, and really any interest-bearing loan is going to work the same. So, if you have the ability to pay extra, if you don't automatically put on there that you want it to go to principal, what's going to happen is it's going to pay your loan ahead. So you might get a statement and it'll show you don't have a payment due for 6 months. So what you really want to do is when you pay that extra amount, you want to dictate that it goes towards, it'll either say principal only or a curtailment payment is the other verbiage that'll usually show up, so that you can pay more towards the principal. So but yeah, basically as interest bearing, on a daily basis. So, when you pay your payments, you can cut years off of your term and not pay, as much if you pay extra towards the principal.
Yeah, so for example, if you've got a $100,000 home that doesn't ever exist anymore, that whatever we pay this month, we're having that interest on top of $100,000. Well then, so we're making our payment, and it's kind of taking a little dip into it, and you're paying $30 off of your home, and the other $1,000 is coming off of maybe your interest. And then the next month, we're paying on, let's say, $99,500. So, but we're calculating that interest. So this could be just a new concept to a lot of, and if you're a first-time home buyer, this would all be kind of new, and it's a little bit scary. So. But I did learn, I heard something the other day that for the folks who are waiting to buy a home, and this isn't just I'm not here to sell anything, but when you look back at the 70s, that the interest rates were insane, and that's what I hear from my parents, is that the interest rates were insane. And truly, if you had waited, if you were like, man, it's 1978, and I'm going to wait till interest rates come down, you'd be waiting until 1991 in order to be able to buy a house.
Yep.
In that time, that house that a person bought in 1978 had 3 times the value in that time. And then here's this person that's waited for 15 years that's been renting the whole time. So even though, these have not been ideal interest, it hasn't been an ideal environment for interest rates, but I bought a condo last year, so I'm in the same boat. But I decided, hey, they said you marry the home and you date the rate.
Yes.
So do you guys have some thoughts on that?
Yeah, so historically speaking, we're in a perfectly fine rate environment. I think that the problem is, when during the COVID era, the rates were so low that we got a little used to that, for a few years. And so now that they're not that, then people think, the rates are so high. But what you said is exactly on point, because during that time, I'll let Kelly speak to this a little bit more since she's on the negotiation side, but the contracts that I received, even on the lender side, people were paying $40,000, $50,000 over the asking price, bidding wars all over the place. They were waiving you can't necessarily waive an appraisal, but waiving inspections, all kinds of crazy things. And they got the 3% interest rate, which is great, but they paid way over what the asking price of the house. And so now I feel like, from what I'm seeing, and like I said, Kelly can chime in more on this, but I'm getting contracts now that are asking price and lower. I feel like, even though we still have a little bit of an inventory shortage, it's still, you have some room to negotiate more and get the house at a more decent, reasonable price. So you're still paying less, even paying at a higher interest rate if you're borrowing less money.
Well, it makes better sense to buy the house now and worry a little less about the interest rate, because the price of the house is the one thing that you can control. Mm-hmm. So even if the interest rate's a little high today, in 3 years it might be a good bit less, and it makes sense to refinance.
Mm-hmm.
Yeah, and you can refinance at kind of any time.
Yeah.
Yeah. Now, I want to back up a little bit on the inspection part too. So if you do find some stuff that needs to be fixed, should you keep looking, or or if the seller won't fix anything? I might have known something about that. Are you stuck? Tell us a little bit about that whole process, Kelly.
No, you're not stuck. We have something called a due diligence period, which is a fancy way of saying inspection period. We try to have all the inspections and negotiating any repairs done prior to the end of that period. That way, if you are just entirely too nervous about the purchase of this house, you can back out and get your earnest money back. However, if you wait after the end of that due diligence period, that's more money that you have lost. So no, you are not stuck in that contract. However, how long did it take you to find the house that you loved? Did it take you 6 or 8 months to find the house that you love? Are you willing to wait another 6 or 8 months, or are you willing to just fix that leaky faucet on your own?
Yeah, that's a good way to put it. Okay, I love this next question, because when I went to go buy my first home, I was like, yeah, I see all those deals, maybe you can buy a foreclosure or fixer upper. This was post 2008. Maybe I can buy a short sale. Yeah, that's a nightmare. Tell me about your experience. Do you deal with any of the foreclosures or fixer uppers and short sales? And do you guys have some thoughts on that?
We don't see many short sales right now, and as far as foreclosures, we're not really seeing a whole lot of those either. And when we do, people, this is not 2008, 9, 10, where you can get a deal on a foreclosure. Now, because the market has been so thin, when you buy a foreclosure, you're paying market value.
Yeah.
Well, and I've noticed too that just a lot more investors came into the market. Mm-hmm. So if there really is anything available, they're snapping it up to be rental property. A lot of times if they bought something way back, it's appreciated so much they can do a second mortgage on something else and be able to do it. So I think it's really hard to compete if you're thinking that you could get hey, this is just from my personal perspective, but I've also noticed, when I tried to put an offer, this is years and years ago, so maybe it's changed, mm-hmm. but there is a big difference between dealing with a bank that owns a bank-owned real estate mm-hmm. versus a person who owns something. Because you're putting an offer, obviously you want to put in a good offer. That's, let's say we put it for 20% below asking, let's just say. Then they come back at more than asking price, and then you up your offer, and then they even raise it even more, because the person on the other end, they punch the clock 9 to 5. Mm-hmm. There's no personal attachment. They don't care. They're just there to do their job, and that's it.
And and banks, they have a lot of money, so they can sit on properties and wait a while until it sells. However, your next door neighbor who has his house on the market, he might need to sell a lot quicker, and it's a lot more important to sell in a timely fashion.
Yeah, people have lots of reasons to sell too. You know, they could be moving or upgrading. Obviously, there's deaths, there's divorce, there's just a lot of reasons why homes come on the market, right?
But as far as like financing options, if you did find something that's a fixer-upper, you know, there are renovation loans available, and there are financing options for those that at one point in time didn't exist.
Oh, that's nice to hear. And then could you later on like refinance, like where you put them all together into like one thing or something like that? Cool.
Yeah, well, and a renovation loan is a one. I mean, it's a one loan. It's not you wouldn't be like doing two loans.
Oh, that's cool.
Yeah,
that's
but
cool.
as far as like if you tapped into equity or something like you could combine them later if you wanted to do that.
You know, one thing that comes up a lot, like one time I here at the Home and Garden Show all weekend, and it's really the value of professionals. You know, and I know a lot of us are, you know, a lot of us want to DIY some stuff, and then where's the line between what you DIY and what you hire a professional to do? And, you know, one question I'm sure a lot of people have is, so how do you two get paid? I mean, and through this process, where does your money come from?
So I am straight commission, so I get paid, you know, when the loan closes, basically, and then, yeah.
I'm obviously commission as well. Normally, and I probably shouldn't say normally, but very commonly, the seller does usually cover most, if not all, of my fee to represent a buyer. If not, then, you know, that's something that we can either, you know, negotiate into the price and, you know, put on top of the purchase price, so that way it can be financed in so long as it appraises. And then sometimes, you know, the buyer is willing, you know, to cover, you know, that fee, you know, separately. So.
Yeah, because the legislation changed like last year. And before that, I believe it was generally a 6% commission. 3% went to the seller, 3% went to the buyer. Am I kind of right there?
Yeah, there's never, at least in North Carolina, never been, you know, any kind of set commission rate, and it's always been negotiable in North Carolina. The reason that you know, that lawsuit came about and, you know, the rules changed was from other states that maybe weren't as clear that, you know, that rate is is negotiable. Now, just because the rate is negotiable doesn't mean that the person you're working with is willing to negotiate, because that's their time, that's their experience. You know, like if they've been in the market for a long time, then you're paying for their knowledge.
Yes, absolutely.
And just to clarify, as far as my commission, the buyer doesn't pay my commission. That's paid by my company.
Okay, great. Now, you know, I do have, we've got another question here too. So we've got a couple that owns a home together. They're getting a divorce, and he wants the house. And how does she get her name off the mortgage? How does she kind of get paid out from that mortgage, or how does that work?
So, you know, if they're not trying to separate the mortgage, I guess you can do a quick claim deed to take somebody off of the house. But if they're truly trying to like completely separate it, then she would need to apply and be approved for, you know, a refinance to do the house in just her name. That's the mortgage side of it, and then the deed part, we would have the attorney do a quick claim deed for him to sign his rights over to her at closing, basically.
Yeah, gotcha. Okay, so now let's, you know, go back to being under contract with a home. What are some of the do's and don'ts? I think this is really mostly going to be Ruth over here answering these. I got the whole riot act read to me before.
Oh gosh. So some of them I feel like should be really obvious, but they're not always. People like, you know, don't quit your job. Don't, you know, buy anything substantial, especially using credit. Like, don't open anything. Don't buy a new car or anything like that. But even changing positions in your company, you know, don't talk to your lender really before you do any kind of major changes. Sometimes those things are not at all going to affect anything, but it can. It depends on how long you've been somewhere, how long you get, you know, how you get paid. Like if you're commission paid, versus W-2 paid. There's a lot of different things. So, but definitely don't change anything with income, with credit. One thing that I think is not common sense that people do sometimes is, putting large amounts of cash into their bank account. We have to be able to source where money's coming from on any transaction. So, we can't source cash. So, until it's seasoned, which takes a couple of months, we can't use it. So you if you have, cash in your safe at the bank, talk to your lender and say, hey, I have this money. What do I need to do with it? So that's a big one. Did I forget anything?
I was just thinking how the other year you and I were working with a client, and I went to show them a house, and they pulled up in a car I had never seen before.
Yeah.
So I called Ruth after the showing was over, and I was like, so we had to find out what happened there. Where did this car come from? Because I immediately thought, oh my God.
Mm-hmm. Well, or the other one, getting so excited about your new house that you go and buy all the brand new furniture and open up a brand new furniture account
yep.
to get it.
Yeah. Don't put the cart before the horse.
Yeah. Well, the important thing to know is that's nice that you did your soft pull and the hard pull and the credit, but there's going to be one more pull before those signatures go on that piece of paper, right?
Yeah, we don't normally have to repull credit, but we do get, now with all this great technology, we get an alert from the credit company if somebody has opened an account. So we don't have to pull it again because we get alerted if they've done it. So yeah, so we're going to know. Same thing with employment verification. We verify employment in the beginning and then right before closing too. So we're going to know, we're going to find out if somebody quits their job or changes positions or, anything like that. So really just if any of the information changes on your application, just talk through it with your lender, because a lot of times there's workarounds for things, but sometimes there's not.
Well, and I think another thing that gets overlooked is people don't realize that co-signing for someone else
Mm-hmm.
can really not be a great idea.
Yeah.
Yeah. So just have your kid or whoever wait. I'm just going to wait till they close on this house real
Yes.
quick.
Yes, please.
All right. Couple of things that you hate to have as surprises. Is there any kind of disclosure required, like if somebody dies in the home? What about if there's crime in the neighborhood? Is there any way to find out this stuff before? What's available for research to find out something that could really be a reason why you wouldn't want to buy the house? Is there a way to find that out before?
As far as a death in the house, absolutely not, unless you get on Google and just happen to find something. Otherwise, the neighbor may tell you something, but that's not something that I would know unless I'm told that. Now, however, if you ask me that question and I know that someone has, then I have to be honest with you.
Yeah.
Cool. Wow, we've just been talking about buying this whole time. Maybe we can run through some highlights about selling the home. Now, I think because we need buyers and we need sellers. So if somebody's thinking about selling a home, what do you charge them to come out and tell them what they can put it on the market for? Like if they want to have you come out?
I don't charge anything to come out. I will do CMA. I'm not an appraiser, so I don't come out and do a full appraisal. I do something that's called a comparative market analysis, which just gets kind of like a pulse of what your competition is putting their house on the market for and what it's selling for. So I tell people that the appraisers, they look at the numbers, and they're the numbers people. Where we price sometimes, a little bit on emotion. Like if we're on a very, very busy street, people, may not want to live, on a busy street because their kids may, head towards the road, or they have to worry about their pets. Or if they have like a really, really sloped yard, that's not something an appraiser is going to factor into, into the price. Whereas I promise a very sloped yard will definitely affect the price.
Great. Now, what about suggestions? I've had this experience. Do you make suggestions on what a person can do to make their house sell faster, increase value, make it easier to sell, for instance?
Yeah, I will always give recommendations, but I tell people, this is, these are suggestions. Do with that information what you would like to do. Because if it costs you money, I understand, but you just. I lost my train of thought.
Yeah, but there's some of those things, like I know when I was selling my home in another state, that she was the same realtor who was my buyer's. She was my agent when I bought it. She was my agent when I sold it. She's like, okay, we need to go to the hardware store. We need to go get some flowers that we're going to plant out here. We're going to spiff up a little bit of paint here and there, and we're going to she just gave me the whole rundown on all the things we need to fix and repair that we're going to make, here's a $10 repair that's going to make $100 worth of value when that buyer is looking at it. Because when it just appears to be nice in general, if people start seeing one flaw, they see every flaw. But if we can kind of make it a little bit flawless, a little bit better curb appeal, because you got to get people out of their car and into the home. And so, yeah, obviously. And
not every suggestion that I make is gonna cost money. People underestimate the value that it will bring to just declutter, get some stuff out of their house. It makes their house look bigger. Don't have like large pieces of furniture in a small room. If you have furniture that you have to walk around to get to the next room, buyers are gonna think that room is small. So I'll tell people I recommend that you take this chair out, or that nightstand out. Just because it's just not necessary, and it makes the room look smaller. So not every suggestion that I have, is going to cost money. Clear your countertops off. That's
cleaning windows.
Get all that, get all the lovely, sweet artwork off of the refrigerator. It just makes everything look busy.
Yeah.
So maybe to your point, ask your real estate agent before you start doing things to determine what's going to be worth your time and money before you do it.
Oh, true. Yeah, instead of hey, I'm going to gut the kitchen and put in a brand new kitchen. No. Let's go spend $50 on flowers.
and don't assume that because you spent $1,000 repainting the outside because you had chipping and peeling paint that you're going to automatically get that $1,000 in value come back to you, because that was just deferred maintenance. That was something that you should have been doing anyway. That's not going to increase the value of your home. You should have been doing that.
Yeah. Now, what if somebody doesn't want to? Why should somebody go through all the hassle of listing their house and cleaning and leaving it because you get the phone call and all of that when we're getting these cash offers from getting the mail. I can open up my mail and here's somebody offering as is, sight unseen. Here's market value. Are you seeing a lot of that? And how many of those are scams?
I don't know that how many of them are scams. I realize that putting their house on the market and going through the whole process of having to clean before every showing and run home and pick up the pet and have them out of the house. I realize that is a hassle, but that is a hassle that you get paid very well for on closing day. The cash offers that you receive, they are typically not normally market value. Why would an outside company come in and pay you market value and then turn around and resell the house? They can't make anything. There's got to be a reason for them doing that. They are the ones that are benefiting off of your equity.
Yeah, absolutely. Well, what about the seller saying, I'm not paying a buyer's closing costs because nobody paid mine when I bought the house?
I usually only hear that from more of a more seasoned generation, because they will say, back when I bought my house in the 60s, nobody helped me pay my closing cost. I understand that, but we also have people were waiting, a long time, saving up money for a long time to get the 20% down. They were doing that then, so they were saving, and they were an older buyer at that point. Now we're seeing a lot more younger buyers, 18, 19, 20 years old, are out here buying houses. They've not had enough time to save the money on closing costs.
Well, I think also just, like I mentioned earlier, I think the multiple, and that's like you're in tech, the multiple of what homes sell for versus what regular salaries are is an entirely different deal. I mean, it was like maybe 3 times your salary is what homes used to be, and now it's like a lot more than that.
Yeah, well, and I think the younger generation is realizing too the value of building wealth through equity in real estate, and starting to try to tackle that a lot earlier.
Yeah, that's great. Now, what about like during these showings? I guess you have to come home, you have to get your pet. You really shouldn't be there for the showings, right?
I strongly recommend that a seller not be at the home during the showing, because it makes buyers super uncomfortable. They spend less time in the house, and you want a serious buyer in your house for as long as possible, because if they're in there a long time, they are mentally planning furniture. They're mentally moving in. Whereas if you're standing, like over there in the corner, all creepy, they're going to be.
Oh my God, I've had this experience. It was so awkward.
Right.
So awkward. Because I wanted how big is the closet? I mean, it's a valid question to ask, but like when the person's standing there, it's like, I don't care. I'm like, I'm not here to be creepy and look at weird stuff. I just want to know how big the closet is.
Yeah, I want to know, how big the spaces are.
Yes, yeah. So having the seller hovering or the seller's significant other hovering is so weird.
Also, the seller can say things that are just not a good idea to say in front of buyers. I mean, they can just really put themselves at a disadvantage when it comes time to negotiating, because they want to help sell the house.
Yeah, all righty. So I know we need to wrap things up. Let's let people know how they can get a hold of you guys.
I am available. I would say, I generally will answer, the phone, text messages, all of that between, I would say, 9 a.m. to 9 p.m., because I gotta shut the phone off at some point in time. If I'm showing a house, I generally don't answer phone calls or text messages, because I feel like the person in front of me deserves my full attention, but I will get back to you.
But website, email,
Yeah, they can, give me, they can give me a call. They can text mail. That's not a thing. Text me, email. Reach out to me on Facebook. I'm pretty findable, and so I will definitely get back to you.
Fantastic.
Contact information.
Yeah, I'll just put it in the description where you're seeing this video, and make sure that we got a link over to Kelly's information. And Ruth, how about you?
I'm about the same. I mean, I would say, so I use my cell phone for everything. So my cell phone is great. If you don't get me, leave me a message. Text works great if it's something quick. Email as well. And I have a website that most people go on to fill out an application, to get it started. So, and my hours, really vary according to what I'm doing with my family. But I always respond, even if it's a text message.
Yes, and of course, we're focusing on the Hickory market, but we're, obviously this is online. For anyone who's watching this online, that everything we've talked about today is valid anywhere in the United States right now. And of course, we focus on the Hickory, North Carolina market and the greater Hickory area. I think it's the 9th highest market or as far as most popular market is what I was hearing right now. It's still an affordable place to come and live, and it's a wonderful community.
We're definitely growing rapidly.
Yeah, we are, and bringing in such a variety of people. We've got a lot to offer, and so if you'd like to come to Hickory, I'm here at hickoryshows.com for all of the shows that I'm an organizer for, and if you want to come, either of these ladies could certainly help you out if you want to come to our area. And if you're local, hey, reach out.
You can call me at 828-320-2323, and you can reach Ruth.
Yeah, my cell is 828-291-0562, and I'm actually licensed in North and South Carolina, so I can service anybody in North and South Carolina.
Fantastic. Thank you, ladies. Thank you all for watching, and come join us next time at the Hickory Home and Garden Show.
Thank you. Have a good one.